Before we get into the video, I wanted to quickly introduce my partner, My Flash Running. It's my go-to prop firm since their prices are really cheap, and the main reason why I think it's better than the other prop firms is that they have a 6% profit target, which is insanely low. That's literally like 1 to 3 risk reward trades, and you're already past phase 1. So if you decide to go with My Flash Running, use this code to get 20% off and also support me. But now let's get into the video.
Now, what is narrative and what's the difference between narrative and market structure? We have an old high here. Notice the candles close here and then they open here. So we have this wick and we have this wick right there. Most people will say, well, yeah, there's buy stops above this high. There's sell stops below that low. There's sell stops below that low. Buy stops above this high. And sometimes that's true and other times it's not. I want you to think about price like this. Okay, I'm going to go into your settings on TradingView, go to settings and go up to wicks and toggle that box. Take it off. And now you have this. When I'm looking at price, I'm looking at it initially with this perspective. I'm focusing on the bodies because that's the primary volume in each one of these individual candles. Okay, so when the market trades up there, notice what it's doing. The bodies go just above that old area where the bodies were here. It does not go above where those wicks were. It doesn't need to. Just in the same way, these bodies here, the market dropped down below that, accumulate all the sell side liquidity there, and then it rallies above to take the buy side liquidity here and then ultimately there. That's reaching for liquidity. That's institutional market structure 101. Institutional market structure 201 is imbalance. Now I want to go back to using the wicks for this. When it creates this price run, it's created an imbalance. So when this next candle here closes, we know that there's an area between this candle's low and this candle's opening that is primarily all buying. If we start to trade down into that like we did on Wednesday, the likelihood is that we're probably going to trade down into this candle's high to rebalance. If it's going lower, it's going to rebalance there. Look at the last 3 days high and low and look at the open and the closing price. We're going to take this whole framework and drop down into an hourly chart. Now I talked about how the market reaches for liquidity, and I talked about how the market reaches for rebalancing imbalances. That's the institutional mindset. The key is understanding what the present narrative is. So is the market going down to rebalance, or is it going down to tag sell stops? If it is not going down to get sell stops, it's going to drop to go to a level to rebalance it. What is that? This swing low here, what do you think was resting right below that? Sell stops. The market has rallied. Trailing stop losses could be positioned right there. We also have that same thing I described on the daily chart with that big candle, that big bullish candle. That's occurring right here. There's an imbalance from this high to this low. It's all buying. So in this area, we have two things that the market from up here, once it breaks down, where is it likely to reach for? Well, the market will likely deliver a down candle into that range because we've left this consolidation and this imbalance. The market trades right back up into that imbalance, then trades down. It does not go back to your classic support and resistance idea. So why did it just stop right there and go down and go right into that level right there and below that low? It matters what the narrative is right now. Is it going lower to go down for stops or to rebalance? If that's not true, then it's going to consolidate or go higher. If you can't discern whether or not it's going to consolidate or go higher, then it's likely to keep going lower. So what is it going to reach for? Liquidity, which is sell side liquidity or sell stops, or it's going down to an area to overlap an area where one single candle stands by itself, and that imbalance will be the draw on liquidity.